Welcome to episode 3, everyone. Just to recap, so in episode 1, we put together your financial projections and really made sure you felt confident moving forward with the business. In episode 2, we really worked on the first impression your business makes, establishing a credible, professional website that clearly articulates who your business is. Now in episode 3, we have the privilege of talking with Nikki Semanchik. Nikki is a lawyer who specializes in business law and particularly entity formation. So we're going to be talking about some of the most popular entities and in particular how you can make sure you protect yourself as you start growing your business. Hi, welcome everyone. I'm here with Nikki Semanchik of Semanchik Law Group. Today we're going to be talking all about entity formation and specifically the different types of entities that are available and all of the things that you'll need to know as you're just getting started choosing which entity is right for you. So Nikki is a lawyer specializing in business law, so the perfect guest to kind of walk us through what can often be an intimidating and really challenging process. So I remember when I went through it myself, so I figured we'll kind of just go back in time and I'll act like I'm just restarting with my business. So thank you so much.
Yes, I'm excited to be here. Thank you.
Awesome. So let's kind of do that little time travel, and I'm just getting started and I'm tired of sifting through Google, and now I have access to Nikki, an actual lawyer, to help me through all this. Why do I need an entity to even start? Why not just launch as a sole proprietorship, which I think so many people do?
Sure. And it's not always a bad decision to start as a sole proprietor. Sometimes you are deciding what you want to do. You have a side hustle and you're deciding if you're going to make this full time. And you don't want to jump into an entity before you know exactly where you're headed.
Great point.
So I think it's a good starting point, definitely. But when you're kind of getting serious and you see you have a plan in place and you're looking at like, where do I want to go from here? Getting an entity in place can be beneficial from many perspectives. So one of them, of course, is liability protection.
Yep.
And I think people hear that and they're like, what is liability?
Well, it is. It's scary, right? Like, are they going to come after me?
Are you suing me? Why are we talking about this? It's very scary. But really, it's a protection. It's a shield. So you want to make sure that everything, all liability in your business stays in your business. And no one could personally come after you for your home or the assets in your bank account or, all of the assets that you and potentially your family have built up.
And that's really important. So that I remember was a part that scared me. So does that mean if I'm running a business and I don't have that protection and I make a mistake with my business that they could potentially come after my personal assets? Even my wife, who's not operating with my business, is she potentially at risk of her assets?
Yes, that's exactly what it means. And that can be a scary place to be, right?
Absolutely.
You want to make sure that if you make a mistake or if someone sues you, and we know that we are in a really litigious society.
Especially in California.
Yes. You just want to make sure that you keep all of the liability and the risk in your business. And, you have a business to build up your personal wealth. And you want to be able to build that up and give that to yourself and not risk losing that later because of a mistake in the business.
Makes a lot of sense.
I think of it as like a shield. You form this business and now you have this like amazing invisible shield around you and the business to make sure somebody sues the business, they can only go after the assets in the business. So the business bank account, anything the business owns. And so that can provide, a really great benefit for business owners.
Yeah, and of course, I don't think anyone's launching a business expecting that to happen, but you always want to protect yourself for those worst case scenarios. So that makes a lot of sense. And I know there's different entities that people typically form. My understanding, I think some of the most popular ones, a c-corp, tends to be utilized for those people who are really going out trying to raise a lot of money fast. I think we see it a little more in the venture space, trying to bring on outside investors. I think most new business owners probably, though, that are going to be watching a course like this are likely going to be more in that LLC s-corp space. So would you be able to talk a little bit about those two, because I think they're really popular, maybe some of the differences between them as well?
Sure. So the two big types of entities are going to be your corporation and your LLC, so limited liability company.
Okay.
And, they're similar in that they provide liability protection. The LLC is really a newer entity type. So corporations have been around forever. LLCs are newer in the sense that laws are just newer, right? So we have a little bit less formalities with an LLC.
Okay.
Lawyers like to say that LLCs are really an entity made up of a contract. So you kind of create the rules for your LLC, where with a corporation, we're looking really to the corporation's code that outlines the rules for a corporation. So what that means is with a corporation, there's more formality. So you have to have an annual meeting every single year.
Okay.
Which is kind of an awkward thing when you're on your own, right?
And don't you have to take minutes at that meeting
you have to take
with
minutes
yourself?
With yourself. I always say that meeting could be in Hawaii, though. So
that's a good point. Maybe a little retreat,
yeah, a little
getaway.
Retreat. So it is a little bit formal. I think when you get the process in place to do it, it's not a difficult thing to do on your own. Or a lot of business lawyers will just do that on an annual basis, so you don't have to worry about it.
Oh, so the lawyer can actually help the owner take care of that type of
absolutely,
scenario.
Yes.
Oh,
and I do
great.
that for clients all the time because they just don't want to deal with the hassle of it.
And what does that look like exactly? So if I'm the owner and I'm asking you to kind of help with that,
so
what's that
I would
process?
remind you. I'd be like, hey, Rick. It's time for our annual meeting.
Nice.
We also have to file a statement of information with the Secretary of State. That's one of our requirements when you have a corporation.
Okay.
And I'm going to say, have there been any significant changes this year? Anything we want to memorialize in the minutes? And who did you elect as your officers and directors?
And that's
so that's
really
another
important.
formality that is kind of weird. You need a president, a secretary, and a treasurer. You have directors and shareholders. It's all these titles, and people are like, what does that even mean? It's just me.
Yeah, and you're wearing all the hats.
You're wearing all the
them.
hats, and really it is. It's about that corporate formality, and the formality is what gives us the liability protection. So that's why it's important. We have to do those things to preserve that liability protection. So that's the corporation. And then the LLC is just a little less formal. So you don't need to have an annual meeting. You don't have all those titles. You really just have the member of the LLC, which is the owner, and then the member might be the manager, or it could be someone separate who's a manager.
Yep.
So that's kind of how the LLC works. And with both a corporation and an LLC, they can be taxed in different ways. So that, I think, is where people get confused. They think an s-corp and a c-corp is two different entity types, when in reality it's one entity type. It's just a corporation. It's just how we're notifying the IRS that we want that entity to be taxed.
And that's a really important point, because I've even seen accountants that haven't made that discrepancy or didn't even realize it. I remember vividly when I was starting, I went with the LLC to be taxed as an s-corp so that I could have that pass through. And I remember when I actually broached it with an accountant, they were like, oh, no, you can't do that. And I was pretty sure you can, and we got into a little bit of a back and forth. So I point that out because, again, this is one of the challenges sometimes when you're Googling, and I started spiraling pretty quickly. I thought this was supposed to be the best. So I think that's a really important point to note. It does matter really whether you're choosing the S or the C, and it's the corporation versus the LLC.
Yeah, so first step, we think, what's the entity? Either an LLC or a corporation. Those are the most typical. And then how do we want to be taxed? And I think of LLCs, like when I say they're a creature of contract, it's because they can really be taxed however they want. I call them like a legal tax chameleon.
Okay.
They can be taxed as a regular corporation, an S corporation, a partnership, or a disregarded entity, which means they aren't taxed at all. And the tax just flows onto your individual income tax return. And the IRS doesn't even see it as an entity. The IRS just flows it through on your individual tax return. So it really can be any of those. And there's pros and cons to each depending on like what type of business you want to have and where you are. So I'm a huge fan of the s-corp taxation.
Okay.
So remember, that can be a regular corporation taxed as an S corporation, or like you did, the LLC taxed as an S corporation. And like the reason for that is you end up saving a lot on self-employment taxes when you're an S corporation. So have you found that with your own
Yes.
business?
And in the early stages, you also get the benefits of any losses that you might have attributed to the business, which I did as I was getting started, putting money back into your business. Maybe you're not quite at the revenues that we talked about eventually getting to through that ramp up period. I think that was back in episode 1. And so I know that was a big piece of it for me too. Come tax time, it was nice to actually be able to see that loss flow through to my personal return to offset some of the income that my wife was claiming.
That's great. Yeah, that's actually something I haven't considered, but that's a good point. I think, what scares people maybe about the S corporation is what you need to do to qualify for this, benefit of paying less self-employment tax is that you have to actually payroll yourself. And And
Exactly.
so some people are like, well, this is just me, and that feels really overwhelming. But there are a lot of different payroll companies, and I know there's one that I love, Gusto.
Yeah, the do-it-yourself,
Yeah,
they've come a long way.
It's so easy to just run payroll for yourself. And you always want to have a conversation with your CPA to say, okay, what is a reasonable compensation? So this is the rule that the IRS has. We will give you this tax benefit of being an S corporation. It's basically a small business corporation.
Okay.
And you can save on self-employment taxes, but in order to do that, you have to pay yourself a reasonable compensation.
Yeah, I can't just pay myself $1 and call it a day.
Yeah,
right?
no, and that's different, right? When we're just getting started, maybe reasonable means nothing. Maybe you aren't making anything.
We did talk about that actually in our financial projections episode, so it's not uncommon.
And then as you ramp up, I always say, like, have a mid-year planning session with your CPA, figure out where you're at, and you can payroll yourself once a month. You can change it. It can evolve. Maybe you didn't make anything. You payroll yourself nothing. But I'd like to talk a little bit about how you do get that tax savings.
Please, yeah.
I think it
that'd
probably
be
is
extremely
kind
helpful.
of confusing for people.
Absolutely.
So what happens is in California, we pay self-employment taxes when we're self-employed. Normally our employer pays, you'll see, like, if you're an employee, then you'll have a pay stub and there's a bunch of taxes taken out of it, and your employer actually is paying taxes too. So I pay taxes for my employee.
A lot of people don't recognize that, so that's important. They're paying typically the Social Security as well as the Medicare tax that's automatically taken out of your paycheck. And I think it's like, what is it, 7-ish%?
So yes, on each side. And when it's you yourself, it's 15.3%.
Yeah.
So it's pretty high. And then if you're really getting to a point where you're making a decent income for yourself, I think CPAs will usually say like 30 to 50,000. You'll save significantly on self-employment taxes by being an S corporation. So here's how. So let's imagine that we're making 100,000 in a year.
Okay.
And our expenses are 20,000.
Okay.
So we have 80,000 of taxable income. Right?
Perfect.
That's where we're going to be taxed. 15.3% of that is going to be taxed for self-employment tax. So 15.3 of the 80,000. If we're an S corporation, instead we're going to have a conversation with our CPA and say, okay, of this 80,000, what is a reasonable amount to payroll myself as an employee of my business? What will the IRS think is reasonable? I'm going to payroll myself that amount. Maybe it's 30,000.
Okay.
And that 30,000 is where we take that 15.3% self-employment tax out of.
So all the
Instead
extra,
of out of the 80.
all that extra?
All
is
the
flowing
extra can be a distribution to you.
through? Okay.
Which is going to have income tax taken out of it, of course,
But it
federal
won't
and
have the
state, but
self-employment.
not self-employment tax.
That's huge.
So it's a huge savings. I remember when I was first making the decision in my business, I went to the CPA and I said, run my taxes both ways. And they can do this like mid-year.
Okay.
Say, like, I'm a sole proprietor. This is what I'm estimating my income to be. Run my taxes. Tell me what I'll owe. And then do it as an S-corp and tell me what I'll owe.
Do you remember what the difference was?
It was 50% less in tax.
No way,
It was
that high?
wild.
Wow.
And I knew, I'm a business attorney, but
Sure.
you want to wait to that point where it's worth it to hire a payroll company,
Of course,
to pay the incorporation fees. So you definitely want to like get to a point where you feel comfortable with that before you move forward. That's why I say sole prop's not a bad place to start.
Yeah, that's a good point.
It's just you want to kind of start where you mean to end up. So, think about that too.
I like that. So you're kind of already building the business, and we've talked about that a lot actually in the early stages. You're kind of building with that 10-year vision. I kind of call it like that North Star for the business. So it's not, a few years down the road having to kind of reshuffle things like, where are we? And I think that's really what we're trying to accomplish with the course, is kind of setting people on that foundation that's going to last all through those years, as opposed to these kind of stop and start processes that so many business owners have that don't go through that.
Sure. And I know, like myself as a business owner, once you do start getting busy, you have a lot less time to work on the business and strategic planning and figuring out where you want to be. You're kind of just trying to put out fires and keep your head above water.
Well, and that's even why I kind of pointed out when you said you help with the annual notices for the filings, like as if I don't have enough things going on and enough fires to put out. It's nice to have that friendly reminder of like, hey, you probably don't want to forget this.
Exactly. Yeah,
so that makes a lot of sense. And I'm glad, because the reason we're spending a lot of time on this is probably the most popular entity structure that we see. I see it frequently with businesses as well. But what are some other maybe uncommon ones that people who are starting a business might want to be familiar with, I know there's a couple that you've run into before that might be helpful to touch on.
So one that I work with a lot is benefit corporations. So there's social purpose corporations and benefit corporations in California.
Popular amongst millennials, especially these days, right?
They're like the sexy corporation. People love them. From a marketing perspective, they're kind of brilliant. So basically what you're saying when you have a benefit corporation is that in addition to maximizing shareholder value, lining my pockets by making money.
So you can make money with this business.
Yes. In addition to doing that, I have this important goal of giving back in some way to society.
Okay.
Maybe it's environmental, maybe it's to individuals through social work, whatever it is.
I think everyone always thinks of Toms when they hear this,
exactly,
right?
Tom's shoes.
Yeah, they did a really smart move with that.
Exactly. And it really becomes like it's a marketing platform, right? So a lot of them will do like when you buy something, we give something back. That's what Tom's did for a while. I don't think they actually even do that anymore.
Oh, really?
But they're known for that.
Yeah.
And so it's brilliant, right? And for like from a real perspective on the business owner, it doesn't change anything. We can still be an s-corp or a c-corp as a benefit corporation. It's just that when we file our articles with the Secretary of State, we're saying we're a benefit corporation, and we're saying to the Secretary of State, we have an additional benefit. So that when our shareholders, they don't have to just maximize shareholder value. They also think about this other thing. A lot of times it's just for the benefit is for the employees, that we care about, valuing our employees and giving back to them in some way.
Interesting.
So that could be your benefit. And so when
what a concept.
I know. Wouldn't it be nice if everyone thought that way? Maybe we wouldn't all be out on our own. But no, what is important to know is when you have that benefit corporation, you actually have to do a B impact assessment on an annual basis. So this is an assessment. It's a third-party assessment. And really, you can go online and find there's a ton of companies now that will do them for you.
Okay.
And it's an internal assessment that you do on your business to evaluate if you're actually making that impact that you say you're going to.
Oh, okay. So it's kind of a way of being held accountable. So it's not just, hey, we're going to do this.
Exactly.
Interesting.
And so what you get is you get a B certification.
Okay.
So, and then you can put that emblem all over your branding and website, and people know that you were evaluated as being a true B Corp.
And are there any benefits aside from just kind of being able to repurpose that from a marketing standpoint? Do they give you any particular tax benefits?
No tax benefits. Really, from like an operational perspective, it's very similar.
Okay.
It's the benefit of like if you had to speak to your shareholders and tell them this is what our mission is for the year. It's not about just money. It's about something else too.
Interesting. So it's kind of a helpful way to rally the team around the core values of the organization.
And millennials love it.
Yeah, actually, we spent again back in episode 1, we talked a little bit about the benefits of paying attention to core values at this stage of the business. Again, thinking with the end in mind, because you're never going to have time to do it again. Yeah. And really kind of focusing around what that team's going to look like that you're building.
It's true. And when you're building a team, you can't bring someone in if they don't have the same values as you, right?
Yeah.
You can't train values.
Well,
it has to be really inherent, and they have to get on board knowing that's important to them.
What's interesting then about the structure is you're almost, by design, the way that corporation is now designed, having that internal accountability that you almost have to keep paying attention to, which could, I guess, you wouldn't want to say easily get lost, but there are a lot of things that happen in the course of operating a business, so having that remain your kind of true north, I guess that would be the big benefit of operating like that.
And that's really the reason I like it. I mean, we're all here, to provide a living, but like if we can do something good. I represent a lot of nonprofits too, so I always say they're kind of like a nonprofit DNA to them. So yeah,
they have that same feeling of good doing. Interesting.
So another thing I see that people come across is they'll say like, I want to form a Delaware entity.
Yeah, that's. I thought you had to go through Delaware, right? They're the most friendly state for corporations. Does it matter that we form it there?
Yeah, so I think it's kind of a little bit of misinformation. It's not for everybody. So when I have a client that comes in and they immediately say they want to do Delaware, I'll say, okay, well, are you going to get investors? And are those investors likely to be VC firms?
So that would, again, probably lead us towards the C-corp to begin with.
It would lead us towards the C-corp, and it would probably lead us to Delaware.
Okay.
Because the venture capital firms are going to want to see their portfolio exist all with Delaware entities. They feel comfortable with it. They know the laws. And Delaware does have a lot of laws that are favorable to corporations. Okay. And so that's why people will incorporate there for like the bigger businesses.
Makes sense.
But if you are in California, you're running your business here, you're entering into contracts here, you're the Secretary of State defines and the Franchise Tax Board define as transacting business here.
Okay.
You're going to have to register in California anyway.
Oh, so I'd have to do both.
So now you have both.
Interesting.
And you still have to pay the minimum franchise tax fee in California. You still have to be subject to California laws. So I think people just don't really realize that.
And would I have also paid a fee to incorporate in Delaware? So am I now?
Yes.
So obviously as a startup business, that's something to be mindful of. We want to avoid any unnecessary expenses.
You would be a Delaware corporation qualified to do business in California. So it's a foreign qualification that you do here. So even if you look up Facebook on the California Secretary of State website, they're listed. So even though they're Delaware, they're here, they're doing business, they still have to register here and pay the taxes here.
Interesting. So it's probably then I'd say most viewers are going to be better suited registering in their state.
Yes, I think
Interesting.
so.
Okay. Yeah, we do hear oftentimes that it's kind of the de facto launching point is Delaware.
It sounds exciting, and for the right type of business, I do a lot of them. They make sense. But for the average person who's providing like services or selling something here in California, they're not looking at investors. They don't want to go through like the typical startup funding rounds.
Sure.
I say
it's not for
stick
everyone.
to California. Yeah.
And so I guess sticking with the state, you mentioned this as well. So there's filings that are required anytime you're operating the business. And so we'll use California as an example, but I do remember when I was getting started, even that was kind of a daunting process of figuring out what exactly do I need to file, when do I need to file, what are some of the common filing forms that people might not be familiar with?
So in almost every state, they have an annual filing with the Secretary of State. So here we call it a statement of information. Delaware, I think it's like the annual report. Florida, I think, calls it that too. So you file that, and basically what you're doing is you're updating the Secretary of State on your most recent address so that they can always contact you, who your officers and directors are, or who your manager of your LLC is.
Okay.
And so it's their way of like having that touch point with you and so that they can find out where you are and they can send tax statements.
Makes sense.
It's also the way that other people, if they're looking up your business, they'll be able to see where you're officially registered. They'll be able to, if they're going to sue you, find your agent for service of process. So it's kind of the official thing. And really, this is important, if you don't do those filings, what will happen is that you will be suspended with the Secretary of State.
So it's serious.
Yeah. And when you're suspended and you're not in good standing with your Secretary of State, then you can't defend contracts. So if you were to get sued, the lawsuit would actually be, not ruled in your favor just by nature of the fact that you're not in good standing and you don't have that protection anymore.
So things could quickly spiral out of control. Yeah.
Yep.
Geez, that's I didn't even know that. So after we go through the filing, are there any other? So the annual is kind of the main one, it sounds like.
So for LLCs in California, you do it every other year.
Okay.
Statement of information, and for corporations, you do it every year. And then you want to be sure that you're going to pay a franchise tax fee in California.
Yes, I remember
so
that
here it's $800.
Yeah.
For LLCs, you have to pay it pretty quickly, actually, within
I remember that.
the third or fourth month after you form. For corporations, that's not the case. But you do have to do that minimum. It's a minimum fee. And so once your revenue goes up, the fee goes up. But most people just pay the $800 until they get to, I think, $250,000 a year.
That makes sense. So. And I remember, even when I was making that decision, I was just getting started, and that was a little bit of a, hurdle for the LLC, because I was like, I'm, again, trying to keep all those expenses low. I went through my expense budget that I, walked through in episode 1, and when I came back to it, it was, hey, at the end of the day, I want to make sure I'm protected, and $800 in the scheme of protection is peanuts, right? I mean, from all the things that could potentially happen if anything were to happen.
It really is.
Right?
And even and especially when you're looking at the S-corporation, you won't even notice that because you'll save so much on self-employment
on the taxes alone. Good point.
Yeah,
yep.
So it becomes really a wash.
A mute point. Interesting. Well, that's awesome. And so, I mean, you've kind of hit on a few of the reasons already, but one of the things I would like to touch on is why would someone who's starting a business work with a lawyer, and how valuable that can be early on versus kind of some of these outsourced, more online options like the LegalZoom being the most popular. Yeah.
I think that it's just the relationship you're building, right? So when you have a business, we can't do it all on our own.
Sure.
We're too busy. And you really have to choose a couple of people that are going to be there to guide you. So you want a financial person, you want CPA, you want a lawyer. And that way when things happen, you know that you're protected and you can make the right decisions. So part of it is establishing that relationship early on. Secondly, because the internet is a big place and information is all there at our fingertips, it can also be confusing to figure out.
Yeah.
And so I find a lot of clients that will form on LegalZoom and they won't have the S election done, or they won't be in the right entity type, or they won't even know why they chose it. They can't remember. It doesn't really suit them. So it's just being more intentional about the business decision instead of just jumping right in and not knowing. I think the lawyer can provide a lot of value there.
That makes a lot of sense. And probably give guidance on things like you don't know what you don't know sometimes.
Exactly.
Right? So
and a lot of things come up with businesses. Are you going to hire an employee? Our laws just changed with employees and independent contractors
the ABCs,
in California.
right?
Yeah. Are you offering services? You need to have a service contract. So all these things that the lawyer can kind of issue spot for you and help you budget when you're ready to make the steps to do some of those other things that are important too. So it's a nice relationship, I think, to have early on.
Yeah, and I think that gets lost a lot of times because it's more expensive, but making those mistakes early are going to be so much more costly later. And again, thinking with that end in mind, obviously sometimes it's easy to take the shortcut, the cheaper route, without really realizing how detrimental that could be to longer term business. And so another thing I wanted to ask you on, and I imagine there's a big benefit to working with a lawyer here, but if I choose the entity and I'm just getting started and I choose the wrong one, or I chose something before maybe watching the course and I've realized I want to make a change. Am I able to do so, or am I stuck into that forever? And kind of what would the process look like of?
So it kind of depends. If you're an LLC and you're taxed as like a disregarded entity or a partnership and you want to become an S corporation.
Yeah, perfect example.
Then we file the S election form with the IRS. Not a big deal.
Okay.
It'll be effective for that coming year.
So that's fairly easy and straightforward.
If you're in an LLC and then you want to become a corporation, then you'll have to do a conversion with the Secretary of State. So it's still doable. And that's an important part. If you're in a situation where you know you're going to want investors, I don't always think an LLC is the best choice. Another benefit of a corporation is you can have multiple types of shares that you offer people.
Exactly.
And so that's a different ownership type to say, like, I have a certain type of shares as the founder and somebody else has a different type of shares and
we've seen
rights.
those are very popular with the tech crowd, especially, right?
Yeah. So I sometimes have clients come to me with an LLC and they're trying to add investors and they're trying to create different types of membership structure. We can do it because LLCs are flexible. It can just be a little trickier.
And the shares aren't interchangeable or sellable, right? It's more like membership units,
It's
I think,
units,
right?
yeah, exactly.
And I know with the S-corp, there's only 100 investors allowed, I believe. So that C-corp is really when you're going,
And the other thing with an S corporation is you can't have different types of share ownership structure. So you can have one share type that doesn't vote. But other than that, the rules say that you can't have like common and preferred shares like a regular C corporation can have. So sometimes that will steer people to the C corporation too.
That makes sense. So it sounds like I think for a lot of viewers, it's going to be common to go from kind of that sole prop maybe to the LLC, and then if they have those higher ambitions or bringing on investors later, they do have the opportunity to transition to a corporation and likely a C-corp at that point, if it makes sense.
Exactly. And some people, this is probably an important note, is that some people, depending on your profession, can't be an LLC.
Oh, that is really important. Good point.
Professionals like lawyers, dentists, veterinarians, accountants, they cannot be an LLC in California. They have to form a professional corporation. So it's a special type of corporation. And then that corporation could, again, be taxed as an S corporation or a C corporation. Interesting.
So it's kind of similar, but it does have a different name. Basically, they've kind of outlined these.
And that's something that I could see someone messing up by going through LegalZoom.
That's a great point. Yeah, so it is important to note which one would make a lot of sense.
Yeah.
Wow, Nikki, this has been so helpful. Thank you so much. I wish I had access to you when I was starting my business. Would have saved myself a lot of hours and a couple of headaches. I'm sure all the viewers are just in shock right now of how helpful this was now that they're going to be going out and starting their own entities and really building their businesses. If they do want to work with you further on a one-on-one capacity, I know they can find you at Semanchik Law Group. What's the best way for them to get in touch with you?
So my website is semanchiklawgroup.com. So they can find me there, and I offer free consultations. So if they just have questions, I'm happy to answer them. I love helping new business owners. So
that's awesome. I know that was a big reason you were so willing to participate on this course, really wanting to give back. And I know that's one of the key reasons that we were able to get you. So thank you so much.
Thank you. Yeah, it's one of my passions. So I really appreciate being here today. Thank you.
Happy to have you. Wow, that was amazing. We're so lucky that we were able to have Nikki on the show. I mean, learning all about the ways to protect your entity. Now tuning in to next week, we're actually gonna have JR Tolver. He's a commercial insurance agent, and he's gonna be talking about all the ways to protect the actual business as you're operating. So tune in next time, and we'll see you again soon.